It's 8:17 on a Monday morning. You're standing in line at a coffee shop. You tap your debit card. Declined. You try again. Declined. Confused, you open your banking app. Your paycheck arrived on Friday. You know you have money. Then you notice a message you've never seen before. This account has been restricted. Within minutes, your rent payment fails. Your credit card payment is rejected. You can't withdraw cash. You can't send money. Your money is still there, but you can't use it. You immediately call the bank. After waiting on hold, the representative says something that sends a chill down your spine. "I'm sorry, your account has been frozen." Frozen? How can a bank freeze your money? Could this happen to anyone? The answer is yes. Every day, banks across America temporarily restrict accounts. Sometimes they stop criminals. Sometimes they stop scammers. And sometimes they temporarily restrict the accounts of completely innocent customers while they verify what's happening. Today, we're going behind the scenes of the modern banking system to discover why banks have this power. What really happens after an account is frozen, and the simple habits that can help you avoid a very stressful day. Let's pause the story. Your card has been declined. Your banking app says your account is restricted. And you're wondering, can a bank really do this? Yes, because when you deposit money into a bank, the bank isn't simply storing your cash. It's responsible for protecting billions of dollars every day. That means security comes first. Every minute, scammers try to steal money. Hackers attempt to access online bank accounts. Identity thieves pretend to be someone they're not. To stop them, banks use advanced security systems that monitor transactions, logins, and transfers. Most of the time, you never notice these systems because everything works normally. But when something unusual happens, the bank may temporarily pause activity to make sure your account is safe. Maybe you logged in from a new device. Maybe a transfer is much larger than usual. Maybe money is suddenly being sent somewhere you've never sent it before. To you, everything seems normal, but to the bank's security system, it may look similar to the early signs of fraud. Banks often don't wait until they're completely certain, because if they're wrong, the money could disappear before anyone can stop it. So sometimes, they pause first and verify later. But what actually causes that pause? Let's look at a simple example. Imagine it's Friday afternoon. You just sold your car. The buyer sends you $22,000 by bank transfer. Everything is completely legal. You have the paperwork. An hour later, the money arrives. You're excited because the payment finally came through. But inside the bank, a computer notices something unusual. Not because $22,000 is automatically suspicious, but because it's unusual for your account. Most people think banks only react after a crime happens. In reality, banks look for unusual patterns before money moves too far. Over time, your banking activity becomes predictable. Your paycheck arrives regularly. You pay similar bills. You spend money in familiar places. When several unusual events happen together, the bank's systems may flag the activity for review. The system isn't asking, "Is this customer guilty?" It's asking, "Does this activity match the customer's normal behavior?" Those are very different questions. A perfectly legitimate transaction can still appear unusual. That's why honest customers are sometimes contacted by their bank, not because they're being accused, but because the bank wants to confirm the transaction is really coming from them. Once stolen money leaves the banking system, recovering it can be extremely difficult. Sometimes, slowing everything down for a short time is the safest option. But money transfers aren't the only thing banks watch. Sometimes, the biggest warning sign isn't what you did, it's where you did it from. Imagine you've been using the same bank account for years. You log in from the same phone. You pay the same bills. You shop at the same stores. Without realizing it, you've created a financial fingerprint. It's a pattern that's unique to you. Every day, the bank's security systems compare your current activity with your normal behavior. Now imagine you're on vacation. You buy a new phone. You log into your banking app using hotel Wi-Fi. A few minutes later, you make a large transfer. To you, everything is completely normal. But to the bank's security system, a new device, a different location, and a large transfer can resemble the activity of someone who has taken over your account. That's why banks sometimes pause transactions to verify they're really coming from you. They would rather interrupt one legitimate customer than allow a criminal to empty someone's savings. Sometimes, your account isn't restricted because of something you did. It's restricted because someone else may be trying to access it. An identity thief, a scammer, or someone who somehow obtained your personal information. In those moments, the bank's priority isn't convenience, it's protection. Because stopping one legitimate transaction for a short time is usually far better than spending months trying to recover stolen money. But not every account restriction starts with a security system. Sometimes, the instruction comes from somewhere the bank can't ignore. By now, you might be thinking, if I don't do anything suspicious, I'm safe. Not always. Sometimes, the bank isn't making the decision. Imagine you're paying for lunch. Your card is declined. You open your banking app. Your account has been restricted. You call customer support. This time, the representative says something different. We're complying with a legal order. In some situations, banks are legally required to restrict an account after receiving a valid court order or another legally binding directive. That doesn't automatically mean the account owner has done anything wrong. The restriction could involve identity theft, a civil dispute, or another legal process. Every case is different. That's why it's dangerous to assume someone with a restricted account is guilty of a crime. You may have seen people online say, "My bank froze my account for no reason." But in reality, there's almost always a reason. The customer may not know it yet, or the bank may be legally limited in what it can immediately explain. If this ever happens to you, don't panic. Don't ignore your bank's calls or messages. And don't refuse requests to verify your identity or provide documents. In many cases, the faster the bank confirms what's happening, the sooner normal access can be restored. So, how can you reduce the chances of ending up in this situation? Let's look at 5 simple habits that can make a big difference. At this point, you might be wondering, so, what can I actually do? The good news is, while you can't completely eliminate the possibility of your account being temporarily restricted, you can make it much less likely to become a nightmare. Habit 1. Keep your information updated. Make sure your phone number, email address, and mailing address are always current. If the bank needs to verify your identity, they'll be able to reach you quickly. Habit 2. Don't ignore messages from your bank. If your bank asks you to verify a transaction, respond as soon as possible. A quick reply today could prevent a much bigger problem tomorrow. Habit 3. Save documents for major transactions. Selling a car? Receiving an inheritance? Doing freelance work? Buying or selling expensive items? Keep the paperwork. If the bank asks about a large deposit, you'll already have the documents ready. Habit 4. Protect your account. Use a strong password. Enable two-factor authentication if your bank offers it. And be cautious of phishing emails, fake text messages, and scam phone calls pretending to be your bank. Sometimes, the biggest threat isn't the bank. It's someone trying to become you. Habit 5. Have a backup plan. Imagine your account is temporarily unavailable on a Friday evening. How would you pay for gas, food, or an emergency? Keeping some emergency savings in a separate account at another financial institution, or having another payment method available, can make a stressful situation much easier to manage. It's not about expecting the worst. It's about being prepared. At the beginning of this video, you watched someone lose access to their money in just a few seconds. Now you know something they didn't. Banks don't temporarily restrict accounts because they enjoy making life difficult. Their job is to protect customers while keeping money accessible. Most of the time, they get that balance right. Sometimes, honest customers get caught in the process, but understanding why it happens can help you stay calm instead of panicking if it ever happens to you. The next time someone says, "My bank froze my account for no reason," you'll know there's almost always a reason. The challenge is figuring out what that reason is. If you enjoyed this video and learned something new, hit the like button. Subscribe for more videos about how money and the financial system really work. And let me ask you one question. Do you think banks should be allowed to temporarily freeze an account without warning if they believe it's protecting customers? Let me know your opinion in the comments. Thanks for watching, and I'll see